Welcome to Balancing Acts. I'm your host, Linda Hamilton, a CPA, certified exit planning advisor, and systemologist. Balancing Acts is about helping you balance all the things you have to do to run a successful, profitable business, both life and business topics. Today, we're going to talk more about, I see this as a year-end tune-up or year-end housekeeping for all those LLCs and S Corps and even sole proprietors out there. So we have a great guest with us today, Nellie Akalp, who is a prominent figure in the startup community. She started her first business alongside her husband with just $100 and turned it into a multi-million-dollar business acquisition after only a few years. She's taking her experience as a successful entrepreneur and became a small business advocate, inspiring and educating millions of people through podcasts and webinar appearances and regular monthly columns and blog posts. She writes for Entrepreneur, for Forbes, and she's been named Women Business Owner of the Year by NABO, a top 100 small business influencer by Small Business Trends. Welcome, Nellie. It's great to have you.
Thank you so much, Linda. It's such a pleasure being here with you. I'm so grateful. Thank you for the opportunity.
And I'm going to say one thing that is totally inspiring to me. Not only did you start a startup, but you did it with your husband. And that's often, a struggle for business owners who are in business with their spouse.
Therapy, I'll tell you that.
I bet.
I'm very, 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 transparent. I mean, you know what? You can do it. You can do anything you set your mind to, but if you're going to start that business with your husband, make sure you put some money aside for couples therapy because it'll go a long way.
And I'm sure a lot in our audience there's many businesses that do that. So thank you for that. So this episode is about kind of S Corps, LLCs, BOI filings. I like to think of it at this time of year as a year-end housekeeping, tune-up, taking care of things and making sure that you get things, balancing all that compliance stuff that gives everybody a headache. So let's first start with BOI filings, beneficial ownership, which I don't think you can hear enough about because it's a little confusing to business owners.
Yes. So FinCEN.gov came out with a requirement right at January 1st, 2024, requiring all business owners who qualify as a beneficial owner to file a BOI filing report, which is referred to as it stands for Beneficial Ownership Information Report, for businesses who qualify. And this applies to corporations and LLCs. They take them through a quiz. If you're a beneficial owner of a corporation or an LLC, whether domestic or foreignly qualified, you will have to file a beneficial ownership information report with the FinCEN.gov website. And it depends on when you form that business. So if you form that business before January 1st, 2024, then you'll have to file that beneficial ownership information report by January 1st, 2025. So on or before January 1st, 2025, that beneficial ownership information report must be filed by corporations or LLCs who qualify. Now, if you're a business, corporation or LLC who forms on or after January 1st, 2024, then you have to file within 90 days. And this requirement will change and will be updated if that corporation is going to be formed on or after January 1st, 2025. So all of this and more is on our website at www.corpnet.com. And for those of you who are interested in having someone file it for you, we can do all the legwork, file it for you, and make sure you're, that corporation or LLC is in compliance. But there are a lot of filing dates to keep, track of. So if it's a corporation or LLC that's in existence and has been in existence prior to January 1st, 2024, then that corporation, if they qualify as a beneficial owner applicant, has to file that BOI filing on or before January 1st, 2025. If it's a corporation or LLC that's been filed on or after January 1st, 2024, they have 90 days. if it's a corporation or LLC that's going to be filing on or after January 1st, 2025, then they have to file 30 days of that filing date.
Right. And I'm telling people, basically, if you existed already in 2024 or before, get in touch and get help now. We're almost at the end of the year. It's time to find to get this file, because the penalty, what is it, close to $600? Is it a day or a year? It's a nasty penalty.
Well, what they're telling us, it's up to $10,000 per corporation or per entity. But as you know, it's a case-by-case scenario.
Right.
They may have some reliefs that they come up with. But what we're telling, our clients is, you can potentially get fined up to $10,000.
Yeah, or the red tape in trying to get out of the penalty. Exactly. So just get it done. It's actually not a difficult filing. It's mostly name, address, and information that you're putting out there. Ownership could be a little bit about not just that you own the company, but perhaps an employment agreement or something that maybe gives you control over the company, that you can influence it. So you want to get in touch and make sure you have that together.
Yes.
That's our best advice.
Yes, and just so you know, you brought up a great thing here as far as who actually qualifies as a beneficial owner. We have a great quiz listed on our website as a link that when you go to our website at corpnet.com, what you can do is just click on the BOI filing, and it takes you through a quiz to determine whether you're actually a beneficial owner that qualifies to file this BOI filing.
Thank you. And there's always some complication. Oh, I closed my business before the end of the year. You still might have to file. It's not painful. Just do it. If your lawyer's not helping you with it, or if your accountant's not helping you with it, you can get this done. I've sent many of my clients to corpnet.com to help them with that filing. So that's a year-end housekeeping that's really important. And I think that's an annual housekeeping. I think we're going to actually have to update that once a year, aren't we?
That is correct. We don't know yet, but that's what I'm assuming as well.
Right. So keep our ears open for what the government, and they do love their red tape. So let's talk now about, let's say, S corporations. In general, you posted something recently, which I thought was an excellent article about, whether an S corporation could actually be harmful to your client, or is it really good for your client? And oftentimes I hear accountants say, oh, it's going to save you money in tax. But tax is not the only reason to have an S Corp, and it's important to really think through these things. So what is your perspective on that?
So, Linda, I really love this topic because I'm an open book. We're an S corporation. I love it, but it's not for everyone. So let's just get to the basics first. An S corporation is not a type of business entity. It's, generally speaking, a C corporation or an LLC who applies to the IRS to apply for this designation for the IRS to treat that business entity as a pass-through or a flow-through entity. What does that mean? A pass-through or a flow-through entity means that all the profits and losses will pass through and be reported on the shareholders of a corporation's tax return, or at members if they're owners of an LLC. So what this is doing, by a corporation or an LLC applying to the IRS and wanting to get approval for their entity to be treated as an S Corp designation, what it means is generally that C Corp that would typically be paying double taxes would now be treated as a pass-through tax entity, and that they're avoiding double taxation at the corporate level. So the profits and losses flow through and are taxed once at that shareholder level. Similarly, with an LLC who will qualify, it's basically having that LLC member now be able to be taxed as an S Corp, avoiding not double taxation, but avoiding those higher self-employment taxes that otherwise an LLC member would have to pay. So again, it's really important to first realize that an S Corp is not an entity. It's a designation that's provided by the IRS to that corporation or to that LLC, okay? And it's only if you qualify and the IRS approves the S corporation election for you. Now, the question becomes who qualifies? For C Corps, it's basically all shareholders have to execute this document, which is what is called a Form 2553. They have to fill it out. All shareholders have to execute it. There can only be up to 100 shareholders. There can only be one class of stock. And that designation has to be made within 75 days of that corporation or LLC coming into existence. Similar to an LLC as well. And the shareholders have to be U.S. citizens or resident aliens. They can't be, out of the country or foreigners. Now, the question becomes, why would a C corporation want to elect S corporation status? Generally speaking, the biggest reason is to avoid double taxation, okay? So why they don't want to pay one set of taxes at the corporate level, and then when the shareholders get a distribution as a dividend, they want to, having to avoid paying those double taxes. So by electing S corporation status for those corporations who qualify, they're avoiding having to pay those corporate taxes at the corporate tax level, and they only have to pay at the shareholder level. Now,
exactly. And so, and we're going to talk more about this throughout. We're going to take a commercial break. You can find more on Nellie's website, corpnet.com, but we'll be back in a moment and we'll talk more about S Corps and LLCs and the differences.